we're here with Catherine March.
Hi.
How are you, Catherine?
I'm great today, Steve.
And in other Boulder Lone Ranger Uncut features, I've talked about the difference between homeowners insurance and mortgage insurance, two very different animals. And Catherine is going to go over today homeowners insurance as well as umbrella liability policies. If you need to know more about mortgage insurance and specifically what that covers, that's the insurance you need when it's required by a lender because you have a certain amount of mortgage based on the value of your home, then you can contact me at 720-365-9550 or check out the video just by checking on more featured videos down at the bottom of the page. But we're going to give the floor over to Catherine today, who is an insurance specialist. Catherine handles homeowners insurance,
Yes.
life insurance, umbrella liability policies, and everything else insurance has to offer.
Pretty much. That
All right.
about sums it up.
So I'm going to hand it over to her, and what we're going to do is we have a whiteboard on the other side of the room, and Catherine's going to use that to do some illustrations. And I'm going to try not to interrupt today, which would be a pleasant treat for me, because Catherine knows her stuff, and we want to get as much information from her as we possibly can today. So Catherine, take it over.
All right. Basically, I find a lot of people, especially when they're buying their home for the first time, really don't know what their insurance covers. What is a homeowner's policy and why do we need it? First of all, if you are buying a home, your lender is going to require it. It does help protect your investment. And even if you own your home outright, you're certainly going to want to keep a policy for your homeowners because you want to protect the most expensive investment that most of us will have. Basically, a homeowner's policy protects your investment from covered perils. What is a covered peril? What does that mean? A peril would be things such as lightning, fire, hail, wind. Sometimes water claims are covered. I'll get into that a little bit more. But certain things are not covered unless you have a special policy. Things like flood, and in certain parts of the country, not really as applicable here, but earthquake coverage as well. And we can talk about that a little bit later.
Okay, I'm going to step out of the picture
Okay.
and let you do it.
All right, I'd like to go over to the whiteboard and just kind of break down what a homeowner's policy is.
All right, we return to Catherine March, insurance specialist, and I see she's put on the board Homeowners Insurance 101, so take it away.
Thank you. Basically what I'd like to do now is go over a homeowner's policy part by part so you understand exactly what your coverage is, how much you should have, and that way you sort of understand a little bit better. The first thing we look at when we're covering a home is how much insurance we have to replace it. Now if you are going to, let's say your house burns to the ground, I like to use that because it's pretty much the most devastating thing most of us can imagine. Your insurance company is not going to cut you a check, nor is it going to pay off your mortgage. What it will do is rebuild your house. So it's very important to know your replacement cost. Coverage A covers dwelling. How much insurance you have if your house burns to the ground and you need to rebuild it. Now it's very interesting how these numbers are determined. Most of these companies have what's called a replacement cost calculator. Again, this is a subjective number because we don't always really know the cost until we get into it. But we can pretty much get a good idea by taking the square footage of your home, where it is located, the year built, the type of construction, and the companies have their individual sites that will give a fairly good estimation as to how much the house would cost to rebuild. Most companies, because homeowners replacement, how much your house is really going to cost to rebuild, is a guess, build in what we call expanded replacement cost, or a little bit of a cushion that will make sure you always have enough money to rebuild that house. Most of the companies I write in do 25%. There are a few companies that do 20%. Some companies will guarantee replacement costs no matter how much it costs, but that is usually a little bit more expensive and a higher premium on the policy. Now, the other thing that's very important to understand with your dwelling coverage is you want to have inflation protection on that. That's a little bit, every year it will bump up to keep pace with inflation. That way, when you've had your policy for 10 years, if then your house burns to the ground, you know you're going to have enough to cover it. So it's very important to make sure you have both of those features on your homeowner's policy with your coverage A, expanded replacement and inflation protection. Now, Something else we do on a homeowner's policy, there's something called actual cash value versus replacement cost. A good policy will insure your house at replacement cost. In other words, no depreciation. However, on certain types of things, such as a roof, there are companies that will insure, for instance, maybe a wood shake roof at actual cash value rather than replacement cost and still give you a very fair premium. So that's something to ask your agent about as well. Coverage B is something we call other structures or detached structures. This covers things that are not attached to your home. As an example, a detached garage, a fence, perhaps a shed in the backyard, a mother-in-law's quarters. Most policies will do coverage B as 10% of coverage A. If that is not enough, you may increase coverage B. Very seldom can you decrease that amount of coverage. Coverage C is your personal property or your stuff. I like to use the illustration. If you turn your house upside down and you shake it, everything that falls out is personal property. What stays is dwelling. That is a pretty good way to kind of think of the difference. Now again, with personal property, you want to make sure you are insured at replacement cost, not at actual cash value. You know, that way if you have an old couch, we're not going to send you to the Salvation Army to get a new one. You're going to get a brand new couch. So we've got the personal property. As you notice, all of these are done as percentages of the dwelling. And what's nice about that is as the dwelling coverage bumps up a little bit every year with that inflation protection, so does your other structures and your personal property. And that way it also ensures you always have adequate coverage.